Hey traders and investors, it's Serge Berger here today. Let's have a look at Netflix. The stock is getting creamed today. I had a lot of questions from folks after the company reported earnings yesterday and was down big in after hours trading already. So let's have a look at it. First of all, on a long-term perspective, you can see the stock's been rising very sharply since 2012. However, that entire rise pretty much came on waning strength or momentum in that sense, as the relative strength index essentially topped in January 2013, and everything since then is making a lower high. So ever since the stock, particularly since it topped in February, then it shouldn't have been something to go crazy long or short in, for that matter, until you had some sort of signal, which we never got until just now. But pretty much the stock was more of a sort of a trading stock than anything to do on a swing trading front. So now let's have a look at the daily chart, where we get a little bit more information of what the damage looks like. Let me flip this into a daily. And you can see basically, obviously today, with just one swoop, we've broken below, massively below all the medium-term moving averages, and pretty much looks to me like gravity here should at some point over the ensuing weeks get this stock probably towards the $300 area. Why? Well, a lot of times when you have momentum stock like this crater, there's follow-through selling, at least to some extent, particularly when the broader market is weakening and weak as it has been recently. This is a different environment than it was in January, keep in mind. So I do suspect that the stock could fall back towards the April lows, just around the $300, maybe $310 mark, maybe $290, something like that. So I would personally am looking to be a seller of the stock on any meaningful oversold bounces, with defined risk. Of course, this is the stock that can move a lot, so you do want to sort of keep stop losses of 5 to 7%, because the stock can certainly bounce very hard. So you want any exhaustion signs on any sort of oversold bounce here, in my opinion, is something to sell into to get the stock back down to $300. Those are the more tactical traders, and alongside, I would say $300 or so. Particularly if the market starts stabilizing as well around that area, would be something where the stock would again make sense on the long side, for potentially if we move back towards 400. So I hope this makes sense, guys. As always, if you got any questions, you can hit me up on Twitter. My Twitter handle is SteadyTrader, and I'll see you in the next video.